Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, today guys, time has come to take a look at the Australian dollar again. Because in Australian dollar, although we relatively rare take a look at this currency, but still I'm keeping an eye on it, and very often here we could get some interesting trading stops when we, do not have something valuable on our primary currencies, in euro currency and the cable. First of all, in the euro currency, and you can see the market still coiling around the resistance area. Actually, it has hit the neckline, so we even could draw it horizontally. So initially we thought that might be some slope, but currently, as you can see, market has hit it very accurately. Now we're seeing for response. On the cable setup that we discussed yesterday was not able to form. As you can see, market has trying and challenging this resistance, but wasn't able to break it in. And here was the first sign that overall short-term bullish context is over. As you can see, as we said, if market will break this triangle down and return back below this area, coming somewhere in the middle to the C point, this context is not valid anymore, and you can see this market is dropping. On Australian dollar, meantime, we have important patterns on the high time frames. Just recall, approximately a month ago, we talked about reaction on the market on the strong resistance area, and market has formed here a bearish reversal week. As you can see, market created the new top and dropped and closed below the lows of the previous week. So this is on the weekly chart. This is not intraday, this is not daily, it's on the weekly. And usually reversal candles on the high time frames have some consequences, so some continuation. And from that standpoint, we said, guys, let's take a look at what pattern could be formed. And initially we have suggested that it might be head and shoulders. And currently you could see that time has come. Yes, indeed, market stands very close to the final stage of this pattern. So this very accurate extension, if you take a look at this stuff, you can see this 1618, perfect ratio between the shoulder and the head. Market finally hits the neckline and shows the bounce forming the right arm. So we stand somewhere near the point where we could consider taking the short position. The possible stronger A, B, C, top, D pattern somewhere to the downside. Or in the case of the invalidation, as market will break this area, top of the right arm, and starts moving high to the top, and this will be failure of the hand and shoulders, which also could be used as a directional pattern. It means that market will go above the top. So that's why hand and shoulders is interesting for the both directions. So by current situation, if we'll take a look at intraday charts, I would consider level around 78.35, with a few reasons. First of all, you can see that the 30% already mostly has been broken, and 77.13, and also the OP target was standing here, but market has broken it up. And in general, if you'll take a look at these ABCD patterns, yes, this is the head and shoulders on the bottom, so easily could be recognized. So, and with this CD leg, you can see this strong acceleration. So you can see that the CD leg is faster than an AB. In such situations, as a rule, market trying to complete the XOP. So once we see the acceleration right to the OP target and tail closing, you can see that almost all candles here is closing at the top. Well, this is a situation in favor of the continuation. That's why I wouldn't be too hurry with the taking the short position right here. I would consider 78.35 an agreement with the XOP is a potential point where market could turn down. So at least from the probability point of view, it's more safer to take position here, because with the minor bounce, some respect of this area, we could move our stops to the break-even, and then we'll be indifferent to whether the hand shoulders will work or it will fail. So our position will be protected. And here is really high degree that technical bounce here will happen. That's why it's relatively low risk trade around this area. Besides, 78.35 is an area right here that corresponds to the top of the previous arm. So that's from the harmonic point of view also it's more preferable to consider. So that's as you can see, we have interesting stuff in Australian dollar that definitely worth of our attention. Let's keep an eye on it, and as soon as market will reach the XOP, we probably prepare another update concerning the entry in a trade on this currency.